I'm just doing an update video. I had several pensions, about six pensions that I combined into a Hargreaves Lansdown SIPP to try and make more money in order that I can retire. This is not financial advice. I'm just a fat man who doesn't know what he's doing. Now, I'm nearly 54, and I would like to retire somewhere between 55 and 60. I'm not working past 60. My dad died at 57 of a heart attack. And, he used to come home from work and I used to look at him and I used to think, oh, you're knackered. You should be retired. And he just sort of carried on working and then he died of an heart attack. So I think to myself, I don't want to be like that. So I'm sort of like preparing myself for retirement. That's what's going on. I'm currently working a 4-day week, and I'm doing about 36 hours. But I'm having to travel an hour to work and then an hour back from work. So it's quite a long old day. So retirement, I would like to go at 55, but I don't think it's possible. I'm talking to somebody over the weekend, and friends of his. I think they were sort of same sort of age, about 55, moved to Spain, bought a villa, and thought to themselves, "All right, we'll live in Spain. It's a lot cheaper." And they've currently run out of money. They've had to sell the villa and move into rented accommodation, and they're literally just scraping by. So I think that is the problem. When you think about retirement, it's very easy to think, oh, I've got plenty of money, I can afford to retire, and then you run out of cash. Just to let you know as well, I'm a landlord. I've got a few properties that I rent, and this Hargreaves Lansdown SIPP would just sort of, I'm expecting it to last me a year or 2 years, take the cash, and then that would allow me to sell a property and get some money in, and then maybe do some more investing. And then that would, hopefully see me into retirement until I get the public state pension. Right. So this Hargreaves Lansdown SIPP has now been going. We've now been going 5 months. That's what we've been going. If you look at my previous videos, I think I had about 23,000. I think I had about 23,000, which was combined pensions, which I paid into the SIPP, and then I've invested that into shares in companies. And since the last video, I have bought some more shares. I've had some dividend payments. So M&G PLC have paid their dividends. And what I bought was 2 different shares. Now I bought Handels Banking AB, right? If you can see that down the bottom here, Handels Banking AB. Now they are a Swedish commercial bank. The shares are round about, obviously they're priced in whatever it is, Swedish krona or whatever they are, but the price in the exchange rate, they're about £10 a share, so they are expensive shares. But the dividend payout currently is 13%. They have got this handles banking. They have got branches all over Europe. I think they've in the UK. They've got 4 branches, and like I said, they're a commercial bank. It's the sort of thing where if you're a factory and you want to invest in machine tools and you want a commercial loan, it's that kind of thing. They will do they will let an individual invest with them. But what you have to do, you have to fill out a proposal sheet, sort of saying to them, how much would you like to invest? And then they get back to you, and then they'll send you an offer and say, if you say to them, I've got £100,000 I'd like to invest. I don't need the money for 2 years. What rate of interest can you give me? Then they'll get back to you, and then they'll give you a figure. And what I've seen is the interest rates that they pay are very good. Like I said, this is not financial advice. Don't watch this video and then think, oh, I'm gonna contact Handels Banking and you know what I mean. But I'm just telling you, giving you an idea what they do. And what people were saying was that it's the sort of thing that if you had a sale of a house or something like that, and you had a spare 100 grand kicking around, you could open an account with them, and you would get a very favourable rate of interest. I saw somebody on one of these sort of financial chat websites, and this guy was saying that his ex-girlfriend invested the money, and she was getting more than the base rate. So if the base rate was like 5%, they were giving her like 5.25%, something like that. So anyway, I saw these shares, £10 a share. I've bought 40 shares. That's cost me 400 quid. And I'm currently down. I've bought them a couple of weeks ago, and I'm currently down 2.96%. I'm down 12 quid. That's what I'm down on them, 12 quid. But I have just bought them. And the problem is, buying such a low amount of shares is not good. Buying on these online accounts, if you're buying £400 worth of shares, pretty much is dead loss, because you're paying the commission. So it doesn't work out very favourably. But I don't want to pay any money into the account. The money I want the account to be self-serving. So any money that's reinvested is from dividends. Now, the other share that I've bought Angus Energy PLC. Angus Energy PLC. Now, that's been in the news a bit. It's been in the news a little bit. And it's like they've got an operation, I think it's Saltfleet in Lincolnshire, so not too far away from me. And basically, they're an oil and gas producer, and they've got a large underground sort of rock gas storage. That's what they're hoping to. That's what they're hoping to exploit. And store gas in the rocks, sort of thing. They are producing oil, and as I say, the shares are dirt cheap. I think I bought the shares, and they were 0.20 of a penny. So the shares are not even a penny. They're like 20% of a penny. You know what I mean? Try and get your head around that. And I bought 131,000 shares, right? And since I bought them, the shares have gone up in value 5.59%, right? So I bought them as well. My total now is my gain is £2,678, which is a gain of 11.5%. That is on 5 months. So what I'm saying is, if you'd have done like one of these online robots investment platforms like Nutmeg or something like that, with my investment strategy, I would have beat the online robo investing platforms. You wouldn't have got 11%. So I'm reasonably happy with that, but we'll see how we go. Obviously with these tariffs that America are going to put on the UK, by next week it might all go to pot. But I'm going to do this regularly. I'm going to do this regularly. just to show you where I am. Like I said, this is not financial advice, but I wish I'd have started this earlier. I think probably a lot of people might watch this, and they've got pensions that are frozen, and then they just go, well, I can't do anything with it. I'll take the money when I'm 55. But you could, if you're interested in the stock market. I know a lot of people like investing in trading 212 and stuff like that. You could do one of these SIPs, shift the money you've got in your pensions, especially if you're young. If you're in your 20s or something like that, and you can get like 40 years of growth. I reckon it might be a goer. So that's all I'm doing for now. So that's just a quick update on my Hargreaves Lansdown SIPP. Okay, cheers, bye.